India wants more global money flowing into its markets. But for years, many overseas investment funds have hesitated to use India-based fund managers because of one big concern: tax uncertainty. Now, the government wants to change that. A new tax amendment bill proposes to simplify India's fund management rules to attract more foreign capital, encourage global funds to be managed from India, and provide greater tax certainty. So, what exactly has been proposed? The changes are part of the Taxation and Other Laws Amendment Bill 2026, which is expected to be introduced in Parliament. The central idea is simple. If an offshore investment fund appoints an India-based fund manager, that alone should not create a taxable presence in India, provided the fund meets the prescribed safeguards. So what was the problem? Under the current rules, offshore funds have to satisfy several strict conditions relating to their size, investor mix, and investment structure to qualify for this tax protection. If they fail to meet these conditions, they risk being treated as having a business connection in India, potentially exposing their India-linked income to tax. So what changes now? The proposed bill removes most of these eligibility requirements. Offshore funds would no longer need to meet conditions such as maintaining a minimum corpus, having a minimum number of investors, or complying with several diversification requirements to qualify for the tax safe harbor. Only a few key safeguards would remain. For example, Indian investors cannot account for more than 5% of the fund's assets, and the fund cannot directly or indirectly control a business in India if it wants to remain outside the Indian tax net. Tax experts say this marks a shift from a rigid rule-based framework to a more practical, substance-based approach. The bill also proposes tax measures for other sectors, including electronics contract manufacturing, data centers, and certain rough diamond trading activities. But why does this matter? India has been trying to attract more foreign capital after seeing sizable outflows earlier this year. The government has already eased tax rules for some foreign investors, and this proposal is another step in that direction. For global investment funds, tax certainty is often just as important as investment returns. The government's message is clear. If India wants to become a global fund management hub, it needs to make managing global money from India simpler and more predictable. The proposal must still be approved by Parliament. If passed, it could make India a more attractive destination for managing global investments and bringing in long-term foreign capital. Follow Business Standard for more stories.